Hey guys, I'm John Fryer. Welcome to Fryer Funds, welcome to my kitchen, and welcome to the Fryer Feast series. In this series, we took $15,000, we're investing it into individual companies, with all investment decisions made over the weekend to be executed on Monday. This is for people who work 9 to 5, who don't have time to trade during the week or make decisions during the week, so we focus on the weekend execution and go from there. Now, I want to point out, this is not financial advice, this is not legal advice, consult your own advisors, and make your own decisions. But with that said, let's dive in, see what happened this week, and where we're going from here.
Hey guys, as always, not financial advice, not legal advice, consult your own advisors, and make your own decisions. But let's go ahead and get into it. Kind of some fun stuff going on out there. First, we are over 20,000 for the first time. Now, it doesn't mean we'll stay up here. If you look at the graph, it looks like we're overbought or a little high. We really spiked up this last week. I'm not too worried about it because of how we're positioned, though. So we actually may stay above 20,000 week by week going forward. We'll see. But kind of exciting, 20,000. We started with 15, so we've now reached over 33% return since we started at the end of April, April 20th specifically. But yeah, so let's get into things for this week. So this last week, the S&P 500 went up 2.4%, which is a big move for that. We went up almost 6%, which is great. Yeah, so that's the big run up. But okay, so last week I talked about how the S&P 500 could change in September because that's when they review it. Well, I didn't even consider the Dow Jones changing. It didn't really even cross my mind because of the way it works. It's 30 of the biggest companies that are supposed to represent not just the market, but the economy and the world and stuff. And sure enough, it was this last week, after I released that video, Dow Jones is swapping out 3 companies. It's only 30, so that's 10%. What a change. Now, the biggest change here is Salesforce going in and Exxon coming out. Exxon was the oldest member of the Dow Jones, 92 years. It represents oil, mostly. And part of the reason for this change, though, was because of Apple's stock split, which I talked about a little bit. For now, we're not doing anything with that, so I'm going to leave that alone. But with the way the Dow Jones work is that it's a price-weighted index based on the stock price, the actual dollar amount per share, which is kind of an arcane way of doing it with the way things work. So with Apple splitting, their share price is going down, so it had less influence on the Dow, and they didn't want to do that because Apple and technology is such a big part of us going forward. They wanted to put something else in to help balance and add more exposure to technology. And they chose Salesforce, which made Salesforce go up, and then Salesforce reported awesome earnings, making it go up even further. And I'm really glad we own CRM. A lot of times CRM is kind of a laggard, but in this case, it's really gone up, and there could be a lot more room to run. So anyway, yeah, Dow Jones changed. The S&P 500 might change this next month. We'll see what happens. We might look for opportunities there going forward, but for now we're not. The other big thing this last week, the Fed is not the biggest thing to take away from Powell and the Fed is they're not going to try to stop inflation right away as it happens. They're going to let it run up some and try to average the 2% rather than trying to keep it at 2% per year. So this could mean we'll see quite a bit of inflation with all this money that's being printed and loaned out, low interest rates. Inflation could kick in. So we might want to take advantage of that, along with the election coming up. If Trump gets in versus if Biden gets in, the difference is there. But the biggest thing from the Fed announcement was that they're going to let inflation go ahead and run if it will. They've been trying to keep it at 2% for since the financial crisis, but since then, very, very few years have we actually hit and gone over 2% anyway. So it could be that they're going to let inflation run, but inflation may not run anyway. We'll see. So, next on our list, so I talked about HPQ last week a little bit, saying I wanted to buy more. I think their earnings are going to come out and do really well, and that I touch on it this week to see how they did. Sure enough, they reported earnings. They were really good. Laptop sales are dominating. Consumer printers are up a bit. Their small business segment suffered, and their desktop segment suffered a lot, actually. So it did go up, but it was like 5%, 6%. It wasn't a huge move. So we do have some gains on that. But HP, I want to talk about this a little bit. HP is generally ignored by a lot of investors specifically retail investors or Robinhood investors, as you might hear them. And we're kind of on that base camp because we have very little amount of money. And I'm using Webull for this. I do use Robinhood. I also use E-Trade and a few others. But Robinhood investors are people who have only been in the market for less than 5 years, a lot of them coming in just this year because of the massive sell-off in March. So they will ignore stocks like HPQ a lot, and so it might take a little bit more time for it to actually come up. So it's only gone up 5-6%, but this next week and over the weekend, as the institutional investors look at it and do their research, I'm still expecting more of a run-up on HPQ as the big investors, the old-time investors, start buying into this. And it could catch wind for the retail investors like us, but we'll see. I'm kind of a mix in that I've only been investing for 4 years, and I have some money, more than a lot, but not nearly as much as most. I'm a unique mix. I like to invest based on institutionals metrics mixed in with the retailers, because the retailers move stocks like Tesla. The only reason Tesla is as high as it is because of the retail investors. At the same time, the only reason J&J, Johnson & Johnson, hasn't moved up is because the retail investors kind of ignore it. So I kind of balance out the mix of the two, and that's what makes us all kind of unique in that stock prices are based on what other investors, whether they're big time or little, are willing to buy and sell them at. So yeah, anyway, HPQ kind of ignored a little bit, but did go up. I'm expecting it to go up even further. We'll hold on to it, but I wanted to touch on it because I talked about it last week. So last week we also decided to set limit sales, good till cancel limit sales on everything in the grill, so that we could take advantage of major spikes and sell some, take some profits, and then when it sells off, we might buy back in. And sure enough, after setting that on Monday, a bunch of them did hit this week. IMAX actually did hit on Monday, just a few hours after I said it. So we lost, in a sense, with where the stock prices are right now, about $20 extra profit we could have if we sold now rather than during the week. But that's okay, because if it sells off, or had it sold off on, say, Friday, we've already captured these profits, and I'm okay with capturing profits and missing out on a little bit as long as the profit's captured. So yeah, I just want to list out the ones that sold here. Now, we still own all these. They're still in there. We still own quite a bit. This is just to capture a little bit of profit. And we might buy back in. The only one that's kind of, I don't know if concerning is the right word. So AMC is about to where it was pre-pandemic, and IMAX is coming pretty close. IMAX has a little bit more room to run. Now, Cinemark also has a lot of room to run. So if these continue to sell up, I kind of want to sell them, or go up, sorry. If AMC and IMAX continue to go up, I might sell them and buy more Cinemark. But at the same time, looking at retail, I did that with Gap, GPS. We sold out of GPS, and now we own Macy's, Kohl's, and Nordstrom. Well, GPS, Gap continues to run up, and we're not in it. We've got these others that are still lagging, and they're still down, and they're just not moving up. So I don't know how I want to do this just yet. We'll continue to keep an eye on it. Maybe what we'll do is sell some AMC, but still hold on to a little. We'll see. Anyway, the rest of these, no big deal. But yeah. So with those sells and the other moves we did last week, our cash position grew by over $600, and of the 20,000, we're at about 22% cash, which is actually quite a bit. But I'm still being conservative. I don't want to buy in yet. I'm still expecting a correction or rotation or something to come. We still have the election, the Fed's doing things. So I do want to put more cash to work, but I'm still leaving plenty of cash on the sidelines so that if we do have a massive correction, we can jump in and take advantage of it, and we'll dollar cost average in, maybe even set buy limits similar to the sell limits that we've got set in place as things move. But yeah, it could be a couple more weeks, maybe another month or two, but I want to have the cash on the side ready to buy in. But with that, let's look at what I'm going to set up to do tomorrow, August 31st. So we're going to buy one share of Chegg to lower our cost basis there. The only other one I kind of want to buy still is Zillow, because our position there is very small, but it keeps running up, and I want it to kind of sell off and buy. And I was going to, I think it was 2 weeks ago, but I didn't get up early enough in the morning to buy it. It ran up and has gone up since, but not a lot. But anyway, yeah, so for now, we're just going to buy Chegg. We'll wait for a pullback on Zillow. Other than that, all the other positions I think we're okay with right now. But we're also going to introduce options and put a little bit more cash to work. but get a little bit of cash with options. So if you don't have options enabled, it is something you have to go into your account for your broker, be it Webull, Robinhood, E-Trade, or whomever you're using. You have to sign up for options. I think to sell covered calls, you only need level 1 options. There's 4 levels. You might need level 2. It should be pretty simple. Go into your account for whatever brokerage you're using, sign up for options. Now, if I get a lot of feedback that nobody can, or they're not getting approved for options, or they don't want this as part of this portfolio, then I'll stop doing options going forward. We'll just do these 2. But otherwise, I'm going to start introducing them slowly as we can, because it's not always going to be ideal for this small portfolio. But I do want to at least explain it, go over it, use it a little bit, get a little bit of cash. And again, if nobody else wants options in this portfolio, I can stop using it. But okay, so WTI, which last week I talked about, I want to get out of oil, which I do. Couple of things that changed though. The storm in the Gulf Coast, less drilling could help drive oil a little bit higher, the actual price of oil. And as things come back online, I still think oil will bounce up. So I'm okay doing this, buying 31 more shares of WTI, which is an oil stock, and that'll give us 100 shares. Now you have to have 100 shares to do a covered call option. And what this is we are selling a contract to somebody else saying that we will sell our shares of WTI to that person for $3. Now I already have a limit sell, or did have a limit sell on this for $3 anyway for the currently 69 shares that we own. So instead of just selling them if WTI gets up to $3, I'm going to take 100 shares and someone specifically, I'll sell it to them for $3 if it hits that price by January. And then we're going to do the same thing with Trivago. We'll buy 15 shares because we currently own 85, giving us 100 shares. And we'll sell the January $2.5 call, collecting about $40 or $30 for WTI. So let me actually look and show you on Webull how this is done. Might help explain it a little bit more. So over on Webull here, I'm going to go over to stocks. I've already got WTI pulled up. So here's our position, 69 shares. So I'll have to buy 31 shares first. So buy 31 shares so I have 100 shares of WTI. Then for Webull, this is where I'm going to do it. Robinhood and E-Trade, it's going to be somewhere else, but you're looking for options. You then set the date. So in this case, I'm going to go to January. Now, here in the middle is your strike price. So $1, $2, $3, $4, and it continues. On the left is your calls. On the right is the puts. So ignore the puts for now. We're just focused on calls. We are going to sell the $3 call here. Now, someone else is trying to sell it for $40, 40 cents. Someone is offering 30 cents or $30 because you multiply this by 100 because it controls 100 shares. And this is per share. So 30 cents per share, $30, 40 cents per share, $40. So we might actually be able to get this in between at $35. We'll see what happens tomorrow. If it's below 30, I can't get it for 30. I may end up not selling this. Kind of depends on how things go tomorrow in the morning. But so you select the option, in this case the $3 strike for January. Change it to sell over here on the right. Limit 1, so we're just going to sell 1 contract. And you set the price. We could set it at 40, which is what someone else is trying to set to. I might set it to start with at 35, see if I can get $35. Time and force per day, place order. Now again, you have to have 100 shares, so I can't actually do this right now anyway, but I'll do this in the morning. So what this does is that between now and January, if the strike price, or sorry, the stock price goes up to $3, then the person that buys this from us will buy the shares from us for $3. Not necessarily on that day. They don't have to exercise it right away. It's just by January 15th in this case. So over the next, what is that, September, October, November, December, 4.5 months. Over the next 4.5 months, if the stock price of WTI gets to $3 or more, we will sell them at $3. But we collected somewhere between $30 to $40 up front it's like putting a cancel or a good sell cancel limit order on, but instead of just doing the limit order and selling at that price, we're collecting money to sell it at that price. So what I could do, if I wanted, instead of doing the option, let's see if I can, how do I remove that? Let's look at Trivago here. TRVG, do I have, or did I cancel it already? I already canceled. Okay, let's look at a different one. Groupon. So Groupon right now, we have a limit sell at $37.50. So if the share price goes up to $37.50, we'll sell it at that point. Only one share though. But if we had 100 shares, we could, if we wanted, say go out to November. They don't have a 37.5, so you might do 40. You would set it up to sell 40 shares or 100 shares of Groupon at $40, and you'd collect $3.60 up front per share, so $360 up to $390 as the price sits right now. These change pretty constantly, so we'll see where they're at in the morning. Now, I'm not doing that with Groupon. I'm just using this as an example. Trivago, we're going to buy the 15 shares, and then for January, we will sell the $2.50 strike price. So if the share price goes up to $2.50, we'll sell it, but we're collecting $40 to $50 up front. I know it's a lot to kind of grasp your head around, I guess, but consider it like this. You own 100 shares of the stock, and you're going to sell it at $2.50. But instead of just setting the limit to sell at $2.50, you're collecting money up front from someone that wants to buy it from you at $2.50. So now, granted, it could be that you want to hold on to the stock higher than that, and so we might roll these, but I'll get into that at that time. But for right now, consider this a good till canceled limit sale, the good till January limit sale at $2.50 for Trivago, $3 for WTI. So if the stock price hits that price point, you've effectively sold it at that price point, but instead of just selling it and calling it good, you're collecting money to sell it at that price. So, yeah, hopefully that makes sense and I explained it well enough. But if not, and you guys don't want me to do options in this and you want me to keep it simpler, I can, no big deal. But that's where I wanted to introduce is a covered call. You're going to sell 100 shares of the stock you own at that price by that date, if the stock price is there by that date. Okay. Anyway, that's all I've got for this week. We'll see kind of how things go forward. There's a lot upcoming with the election, possible S&P changes, and the pandemic. Yeah, a lot going on. But that's all I've got, so we'll talk to you guys next week.